But hey, I'm glad to have you here right now. You are awesome. You've been
Thank you.
predicting you've put together a beautiful model for Bitcoin. I think today it's Halloween, October 31st, 2024. And I must say, I am blown away by the good news we're getting over and over and over and over again. I don't think maybe a model could have predicted this, but I don't think I've met anybody in crypto that predicted Howard Lutnick talking about hundreds of millions of dollars in Bitcoin. Personally, you have so many people coming from TradFi that are investing heavily in this space that was not anticipated, I don't think. The volume into the ETFs is spectacular. Regulations are waning. They're not going to win. It doesn't matter what they do now. It's game over now.
Yeah.
How are you feeling? I mean, are things playing out? And I'd love to, pop up your model, tell everybody what your expertise is. And hey, is there any parts of the model that you're thinking, this could be too bullish, it's going to blow the model out, or hey, it's
because so basically, the model in one end, in fact, I can show you some graphs about that. I'm going to show you some slides. So in one end, the entire idea of a model is that we really don't have, we have this general trend, right? The general trend is what really matters long term, right? Because let me show you this slide that I think is one of the most impressive slides. That is this one. Okay, and you are able to see it, right?
Yes, sir. Yes, sir.
So what this slide shows, and I'm assuming that most of your viewers are somehow familiar with the model, right? But the most important thing that is the innovation of this approach. That in one end is not even a model; it's just a different way of looking at Bitcoin, right? So most people look at the graph in a linear fashion, where you have only the price, right, on the y-axis, or sometimes, in particular, people that are familiar with stocks and other assets, we take the log, right? The logarithm of the y-axis. And just as a reminder, what the logarithm does, it's focusing on this idea of a scale, right? Because Bitcoin, I say all the time, Bitcoin went through, it's probably like historically, the asset that grew the fastest in all the history of mankind. I cannot find one single asset that has been changing so much, right? Because I actually was looking a few days ago. I was looking at the first transaction ever, right? This will happen in October. In fact, kind of close to this period of a year, but this was 2010. So do you remember that transaction? It was 5,000 Bitcoins for $1. Can you imagine? Now, if you look at how much time passed by from that first transaction to the beginning of a year, or beginning of the history of Bitcoin, and you're looking at the scale, how much the change in price grew relatively to the change in time, right? It was not much time. It was less than a year. So if you take this ratio using the logs, you get a slope. So imagine, basically, this is the idea, right? If I look at the scale, what is the scale? The scale is the change in order of magnitude, right? So if I go from 10 to 100 to 1,000, 10,000, right? That is important for something that has changed so much like Bitcoin, because if you are focusing too much on the linear changes, like 1, 2, 3, 4, 5, you're like focusing on the tree without looking at the forest. So the entire idea is that we are going to get a much better understanding of what Bitcoin is if we are looking from a point of view that is much higher than the entire picture. Right? So we want to see these changes in order of magnitude. So if we go back to that first transaction, and you're looking at the time that has passed from when Bitcoin was created to that first transaction, and you are taking both the log of a price. So the price, how will you know how much the price changed? Because if that was the first transaction, well, if you use this model, the model says that on day one, the price was something like 0 with 16 zeros, so almost nothing, right? $1. So something on the order of a millionth of a billionth of a dollar. This is what the model says, right? It sounds funny and kind of meaningless, but it's interesting because if you take that first transaction where the price was 3 zeros with 1, right? So basically 1/10,000th of a dollar. So 100 of a cent, right? So one Bitcoin was 100 of a cent. If you take the ratio of these two numbers, what the theory says, what this model says, and the real price at which this transaction happened, and then you look at the change in time, you get kind of like a slope. So imagine like this straight line, right, from high school. You can take the change in the y-axis or the change in the x-axis, right? Rise over run, right? This is what a slope is. Well, that slope was 5.6. This was the first transaction. That is a proportion between how much the change in price was over the change in time, looking at this scale point of view. Well, that is 15 years later, that is the same slope that we have right now. So it's really an incredible property of Bitcoin. We call it, when we study these systems in physics, we call them invariant, right? When there is, because it's very important to understand change, also to understand what doesn't change, right? Like when you, in physics, for example, we have the speed of light. The speed of light is a big deal because it's supposed to be a universal constant. It doesn't matter what is your speed. You're going always to measure the speed of light to be the speed of light. It cannot be changed. It's what is called a universal constant, right? It's something that doesn't change. Same thing with Bitcoin. Bitcoin has a property that is the slope of change. The slope of change, when seen from this point of view of scale, it's something that stays constant. It is pretty marvelous because if you're thinking about this early first transaction, somehow the way that the price was determined was based on this understanding of how the system is growing in time. I don't know how they did it because I don't know if it was a kind of based on the cost of production of Bitcoin at that time. At least, I think they probably did some kind of rough calculation of that. I think actually that was one of my motivation of pricing it at that time. We had a lot of discussion between this person that made the first transaction and Satoshi. We were talking about, okay, how can we value the price? And I think they were using electricity at the time. Well, it turns out with this red line that I'm drawing here in this graph, it's basically, you see how strong of a support this line is. And it's pretty amazing. Look at these blue dots, right? So the blue dots are when actually we touch that red line that you can consider almost like a support, right? Bitcoin leaves that red line to go through these bubble periods. And then sometimes it takes about 2 years to come back to them. And look where it goes. It always goes to that red line. So that red line, we, not just me, but other people that are studying these things, we just found out that has to do with the cost of production. It's basically how much it costs for miners to produce one Bitcoin. So it's some kind of a point of reference that we have, and we can extrapolate.
Is that including capital?
So, it's a rough calculation. So it's, people do it in different way. Yes, you can put capital, you can put, the different expenses that you have, but it's roughly associated with the hash rate because there is basically the same type of relationship between the price and hash rate. It goes like hash rate equal price square. So if you actually plot the hash rate in this graph, this is what you will get, and it some kind of proportionality constant. But we really think that has to do with that this line, this very strong reference line for Bitcoin, has to do with the cost of production. But it's really an amazing thing because you can see how regular the price of Bitcoin is. Like many people think it is completely, irregular and it does crazy things. Yes, it does crazy things during these bubbles, but even the bubble, you see how regular they are. It's not clear that they are from this graph that they all last the same, because you see it's one of the artifacts of this type of chart where time is kind of compressed. But it's useful to do it in that way because what happens is that as Bitcoin grows, it's slowing down. And I know many people get turned off by this because it's one of the things that many people use as a criticism of this power law model, that we are having these, basically we are confirming that Bitcoin goes through these diminishing returns. So that even sailors talk about, right?
Where do you see the diminishing returns?
So the diminishing returns, if you calculate basically what Bitcoin is doing, right? This is the entire idea of how this process.
Hey, let's make sure we're all on the same page regarding diminishing returns, because what is the time frame on diminishing returns? I actually believe that we should see a cycle in the next 3 months to 15 that exceed the prior's growth. Right. And then once all of Wall Street's in, I could see how it would then calm down, but it doesn't mean that it's just going to be average over 20 years, right? The growth. Okay, it could be really lumpy.
We need to be careful about what we mean with diminishing returns, because there are two types of diminishing returns. So there is the overall return that is basically if you calculate the yearly returns, right? Let's say we calculate what Bitcoin is doing over 1 year, right? These diminishing returns are due to the nature of the power law itself. Because remember, from the graph that I just showed you, everything is proportional in terms of scale. So let me go back to that graph, because I want to show you is really the core key idea behind the power law. But you can see it's not something that I made up. It's a clear way of describing how the price of Bitcoin behaves, right? Because I didn't do anything. I didn't manipulate the data. I didn't change anything. I'm just showing the data in a very precise way that reveals these properties of Bitcoin. That is these scale changes. Okay, so let me go back to that graph because it's a very essential graph. It's this graph. So notice we get this straight line, right? Now you have to understand this straight line is not a real straight line. It's in fact, if you look at this straight line in a linear graph, it will look like a J. It will look like this. Look at this. You see, this is how the power law looks in a linear graph. It looks like a parabola, but actually a much faster parabola, because the power of a parabola, usually when people say parabola, they mean the square, right? If you remember from high school, it's like y equal x squared. That is what a parabola is. This equation is y equal x to the 6. So it's much, much faster. That means that, you basically, if you have a power of 6, if you multiply by 2 the age of Bitcoin. So imagine you were one analogy that I can give you. Imagine I bought Bitcoin at day 1000, because all the time that we measure here is always from the Genesis block. It's where Bitcoin was created, right? So imagine I bought Bitcoin at day 1000. Then I wait to day 2000, right? So that it's basically the double of the time. That power of 6 means if you take 2 to the power of 6, you get 65. Now, if you waited to day 3000, you get 720. So that is how much more money you have, right? So if you waited 2 times longer, you are going to get 65. So imagine you invested $1,000, you waited 1,000 days more. 1,000 days more is about 3 years, right? You waited 3 years more. Now you have 65,000 in 3 years. So this is how fast it was in the beginning. We were making a lot of money in the beginning, right? Now, if you waited day 3,000, okay, now it's 3 times more. 3 to the 6 is 720. So that $10,000 investment now will be 7,200,000 in only few years. Okay, now this proportionality, it's valid at any scale. So it will have been valid even if you waited 100 days. So you waited 100 days, you bought Bitcoin 100 days after it was created. Now, at that time, we didn't have a real transaction because it took almost 1 year to have the first transaction. But imagine, right? Imagine this applied even in the early days, because that is the idea of it. This equation, in theory, applied all the way to the first few days. But in that case, the theory says if you waited 200 days more, you could have multiplied by 65 your money. You see, it works. That property is called scaling variant. So to understand the diminishing return that this scaling variant property give us, we need to apply this to longer period, right? So for example, right now, Bitcoin is 15 years old, right? So that means that you will need to wait another 15 years to get an increase in price by 65. But it's still amazing, right? But imagine when you could get 65 by waiting only 1,000 days instead of waiting.
Well, the difference though was I would never put more than $10,000 down 15 years ago. Exactly. Today, right? I'd put 10 million.
Exactly, because
right. And so wouldn't you? I mean, this is my point. Over a period of time, you could see I just want the audience to make sure that you're not saying that over any 1 year period you couldn't have an expansive blowout. Whatever it was last year, it goes to 90% 1 year, and then it calms down in a following period. It just averages out. It's not going to follow a perfect line.
Look at this graph, right? So this graph shows how the price looks like when you take a moving average of 4 years. You see, that is the black line that you're seeing. You see the bubbles and all the other things that many people get excited, right? This period of time where the price goes up very much, it almost cancels. So basically, and another way of looking at that is this. So this is the linear graph, right? With it looks like this J, and look how close of a match the average price is. It's basically oscillating around the red curve. So again, everybody that has any criticism or don't understand the model, but it's nothing to debate. Look at this. It's really a good match with reality, right? But another way of understanding what I'm explaining is this. Look at these bubbles, right? The bubbles, the price goes crazy. I say it's almost like Bitcoin went to Cancun, right? It's having fun. It's doing something crazy. Every time it goes back. And where does it go back? To the red line. That is the power law. So in theory, it's almost like you were saying, if you're looking at the long-term trajectory, it's almost like if a bubble doesn't exist. It's like that is the result of a bubble. They don't exist. They cancel each other. You see how they cancel each other? And what matters is the red line. That is what matters. Now, unless that is, by the way, one of the things I say, that if you want, because you can use both the stability of the asset, but also the fact that it is this incredible volatility. So one of the things I suggest, I have about 700 people that follow me on Discord. We are creating a group. I say, I don't think there is anything wrong for you to take, 5% of your stock, or 1%, or whatever it is that you feel comfortable, and sell a little bit, because then you will have some cash that you can use and buy back when the price goes down. So, it's not a crazy idea to do something like that. I know that a lot of people don't want to ever sell their Bitcoin, but it's not a bad idea to take a small part of your stash and rebalance, in a sense, your portfolio, and then rebuy back when we go down to these levels, okay? Because that will multiply your Bitcoin. Today, we have many more instruments to do that. You could, for example, create, maybe sell some put options against MicroStrategy or something like that. So the beauty of Bitcoin is both that it has a lot of volatility, like some of the crazy assets, like some of the shit coins or whatever. It still has a lot of beautiful volatility that, in theory, somebody with, if you are making a plan, if you're thinking ahead what you want to do, you could use that volatility. At the same time, has a lot of stability. And I want to go back to what you were saying before about the diminishing returns, because the diminishing returns are there. I just explained to you that in the beginning, you had to wait only 1,000 days, for example, to get 65, right? Or anytime you go back, it's a shorter and shorter amount of time that you need to get the same type of multiplicative effect. That is what is called scale invariance, because what matters is the scale. So as more time passes by, the scale of time grows, right? So now, for example, we will have to wait 15 years to get 65. But I say all the time that this diminishing return component of Bitcoin is actually a feature. It's not a bug. Why? Exactly because of what you say. Right now, the fact that Bitcoin takes its time and is still growing at an incredible rate, because that 65, right now, it's about 46%. So right now we are making 46% a year. And then as time goes down, right, this diminishing return, it will take about 12 years to go down to 22%. So it's still going to beat almost any asset on earth, because there are very few things that give you a consistent 20, 30, 40% like we have right now for the next, 20 years. And at the same time, to be so safe like Bitcoin, because, given all the institutional investment, etc., I will say that Bitcoin is safer than gold, is safer than any other type of investment. And the fact that I wrote an entire article, I don't know if you read it, where I explain why Bitcoin is predictable and why the fact that is growing at this predictable rate is a good thing for Bitcoin, and the fact that it's slowing down. Why? Because as these large companies, large institutions are coming in, and they are bringing in billions, and in fact, eventually trillions in investment, you want time for Bitcoin to grow. You want to give space to Bitcoin to create the infrastructure, to create the legal framework, to create everything proportional to where Bitcoin is. Because when Bitcoin was young, a lot of things were happening very fast, right? Because people think that nothing was happening when Bitcoin was very young, like few years old, but it always happened something. I have been around in this space since 2012, 13. And I remember there was always somebody that was like a sailor, right?
Yeah.
Was a Pantera Capital, for example, at that time, several years ago. It was a big deal, right? There was Outstock that decided that they were going to accept Bitcoin transaction, and everybody was always talking about that, right?
Yeah.
There are always events that were proportional to where Bitcoin is. So this entire theory of a power law says Bitcoin is growing with this type of growth that is something that we find everywhere in nature. A lot of systems, like, there were recently, just a few years ago, this article came out where they show that many structures in nature, like the nails and tooth and horns of animal, they follow these power laws. And there is a reason, because it's a way of using resources in an efficient way. As the system grows, so initially you grow very, very fast. And then as the system becomes more stable and stronger, it slows down, because what it takes to make something that is $10 million, $100 million type of asset grow in terms of resources, in terms of capital, in terms of even human capital, right? Or legislation, is going to be very different from when an asset is $1 trillion or 10 trillion or even $100 trillion, right? So it needs to grow in a proportional fashion and take longer. But that is actually a good thing. I know many people don't like it because they will like an exponential growth of a asset. But, that is one of the things that I always debate online, that a lot of bad things are growing exponentially. So one of the books I always recommend of it is very, in fact, Gary, whenever you have a chance, read this book. It's called Scale. It's written by this scientist. It's called Jeffrey West. It's a book that is meant for the average intelligent reader that you absolutely are. And so it doesn't go really in the technical details, etc. But it talks about this idea of scaling everywhere in nature and even in human phenomena. Because a lot of human phenomena, like, for example, I wanted to show you this graph. It's a very beautiful graph that it's mentioned in the book. The book is called Scale. This is the book. And you see the subtitle is The Universal Laws of Growth, Innovation, Sustainability, and the Pace of Life in Organisms, Cities, Economies, and Corporations. So one of the things that he points out is that if you study cities, so a lot of people, when I talk about the growth in Bitcoin, etc., they push back because they say, okay, maybe these power laws are common in nature, planets, organisms, etc. But what about human phenomena? Humans cannot be described by equation. And it's not true because, for example, if you look at one of the greatest human inventions and phenomena is are cities, right? Millions of people work together. They create these environments. They are a source of economy and production, etc. And if you look at almost all the different metrics that are relevant for the city, for example, some of them good, some of them bad, like crime, for example, the GDP, the income, the number of patents that are produced in that city, they follow the same pattern that Bitcoin follows. These are called power laws.
Wow.
You see, look at this. It's the log of a metric, whatever metric you're studying, and then the log of a size of a city. In our case, we are looking at the log of the price for Bitcoin and the log of time. But it's the same type of equation where they follow these power laws. Even, for example, the number of gas stations in a city follow power law. You see a straight line, like the straight line that I was showing before in this particular graph where you take the log of y and the log of x. And so it's very interesting that systems like these follow this particular pattern. Now, in the book, this guy, Jeffrey West, he has also a nice TED talk. The talk is called The Surprising Math of Cities and Corporations. And one of the highlights of the talk is when he mentions that most companies grow exponential. That is what everybody would like Bitcoin to be, right? Like a company. And they say it's horrible. Why? Because Jeffrey, right? He's also a physicist like me. He mentions how, in fact, I can ask you that question. Do you know of any company that is older than 200 years?
Nope.
There are no. And in fact, he jokes, he says, the only one is the Vatican. But, it's kind of a joke because it's not really, but
I think Barclays claims to be 420 years old, but they're done, so I'm not sure that counts.
Yeah, and it's a university. It's not exactly a company, but which one were you mentioning? Which company were you?
Barclays Bank. Barclays of the UK.
I was thinking you were mentioning the university. They say it's 400 years. Yeah, but okay, even if it was, maybe it's like one, right? One company. Everybody.
No, I get your point, though. Everything runs out of steam.
Exactly, because they grow exponentially, and then they dry out of steam, even internally. The administration becomes too big, too large, and they kind of collapse almost on themselves. And that is very typical of many of these exponential processes. Like, for example, cancer is exponential. Viruses are exponential. So a lot of these processes, they grow very fast, they consume all the resources around them, and then they die. While cities, they grow in this very sustainable fashion, because remember, as they grow, they kind of slow down. They still grow very fast, but they grow proportionally to their size. That is where the diminishing returns come, because to us, to our linear eyes, it looks like the system is slowing down. But for the system, because the system works in this funny log of time, the system say, no, I'm doing the same thing. I'm just doing it proportionally to where I am. I'm doing proportionally to my side. If I am very large, I'm going to slow down. I'm going to take things in a more slow fashion. And that allows for the system to grow and become larger and larger in the right time. Because, of course, right, for a system that is $1 trillion in US dollars, the type of legislation, the type of infrastructure, even the miners, everything around it needs to be prepared to go to the next step, right? $10 trillion and then $100 trillion. And that is actually a good feature for Bitcoin. This is what makes Bitcoin so special, that they can do it in this sustainable fashion, while things like NASDAQ and all the kind of things like that, they grow in an exponential fashion, and eventually they will disappear. Eventually they will die. But Bitcoin is eternal. In fact, Jeffrey West has this slogan. He says, cities are eternal. Look at Rome, for example, right? In Italy, we call it exactly this, the eternal city. This is what we call it. Città eterna is eternal, has been around forever, right? Since basically the birth of mankind. And many cities are like that. Hiroshima, Nagasaki, they are being destroyed by atomic bomb, and they came back to life. They still are, right now they are active, thriving cities. And that is because of that particular type of growth that I'm showing you in this graph. And Bitcoin belongs to this category of phenomena. It's different from all the other assets, and instead it follows this proportional growth. So it's unique. If you had to point out to one unique property of Bitcoin, it will be exactly this. So this is this diminishing return that I was showing you in terms of a return. In the beginning, the returns were amazing, because we were making, like the first year, for example, or the second year, we were making like 57 times, right? If you will have invested in the first year, after 1 year, your investment will have gone up by 57 times. Not pair, not percentage, but pair. Today, we are growing more at something like 46%. And these returns are going down. So that is one type. And going back to that graph, this graph that I was showing you. So this is one type of return. So the blue line that you're seeing here is the theoretical returns predicted by the power law. So this graph shows us that straight line that I showed you in the graph is not just some funny line that I'm drawing. It's actually a very deep statistical property, because you can see, right, this red line. What this red line is you calculate the average return at every particular day, looking back 1 year. So you go back 1 year and you calculate what will have been your return. These are real ones. The red one are the real returns, average over 1 year at every particular moment. It's in a moving average, right? So, and of course, they will depend on where you calculate it. If you calculate it on top of one of the peak of the cycles, it will look like that was a very good year, right? Because it takes about 1 year to go up when we have these cycles. So if I am at the top, like here, for example, right, it will look like that was a very nice year. I made a lot of money because it was 1 year of a bull run, right? An entire year of a bull run. Of course, if you're calculating at the bottom, that is here, it will look, it's not very good, as a year. You will still have made some money, but you are calculating at the bottom. So you see how these returns average over 1 year oscillate. But where are they oscillating? They are oscillating around the theoretical prediction of a power law. The power law says this should be your average return, the blue line. And you see how it is in average the same. So again, it's another way of confirming that these bubbles and these bottoms are in a way cancel each other, right? Because what really matters is that blue line. The blue line is the average return. So again, if anybody had any doubt that the power law is real, this graph should destroy that doubt, because look at this, how it's possible, right? That is really following this pattern. Now, you can see also, though, there is another diminishing return. There is a diminishing return of these peaks, because these are related to the peaks of every cycle. And you see they are going down. And weirdly enough, even this going down of the peaks, because you will think, okay, maybe the average returns have to do with the cost of production, it's a long-term trajectory of Bitcoin. But these peaks during the bubble, it's all FOMO, right? It's driven by people getting excited, maybe liquidity cycles, like global liquidity cycles. It's something that drives the price away from the power law. So it goes away, it reaches a peak, and then it comes back, right? But you will think that these peaks are completely disorderly, because who knows what is pushing the price up. But weirdly enough, even these peaks follow a precise mathematical pattern. It's not a power law. In this case, it's an exponential. They go down in an exponential fashion. It's weird, right? But you see, I draw this purple line that shows there is some kind of a pattern. Now, I trust much more the blue line, because the blue line has some fundamentals behind it, than the exponential. So it could be that, given that it's only 3 data points, these 3 peaks, that it's us connecting dots that should not be connected, right? So maybe the next peak doesn't follow this pattern. It's possible. But right now, if you focus on what exactly happened with Bitcoin, even the size of these peaks is predictable. That is really weird. I don't know why Bitcoin is so regular. I don't know what to tell you. Even the distance between these peaks is exactly 4 years. 4 years, like with very, very small variations. So we can kind of extrapolate. So playing this game, right? But to me, and people can speculate as much as they want, but it's always good to have some kind of framework, right? So my framework in this is, okay, let's pretend that these cycles will continue to be as regular as they have been so far. If that is the case, can we kind of predict both the timing and the size of a peak? Yes, we can, because what we can do, we can look at where usually these peaks are. They happen usually at the end of a 4th year of a cycle. So, for example, in our case, first of all, the new cycle kind of started. I said for months, I would tell everybody, guys, when November comes, be ready, because this is when the bull starts. Because usually the bull starts during November of a 3rd year. My way of counting the cycle is I start at the peak, and then there is 1 year where we go down. It's very regular also in that case. We go down for 1 year, we reach the bottom, then we stay for 2 years along the power law. I even illustrated, you see this graph, this is how it goes. I did these simulations where I look at, here basically every black line is hundreds of simulations of possible similar history, almost like a parallel universes, right? It's something that is called Monte Carlo, where I took all the statistical property of Bitcoin, and then I ran the simulation to simulate both the peak and the power law behavior. But basically, it goes like this. We go up for 1 year, we reach the top. So these are the different 3 cycles, and this is actually my prediction on the left side corner. So we go up for 1 year, we go down for 1 year, and then for 2 years, we follow the power law. But even during the bubble, if you look at the total result of going up and then down, it's exactly like if you were following the power law. It is really amazing in terms of how regular it is. But if you are interested and know what the top of the next cycle is, you can play this game where I say, okay, given that we know even the decay of the tops is very regular, we can predict what the size is, and it's about 200,000. That is my prediction. Now, this is a conservative prediction. Can we go higher? Yes, right? Because the power law, I really think that for the next 20 years, we are going to follow the power law. Now, the bubble are a little bit less strong in terms of a theory because when I do the projection for the power law, I use thousands of data points. Here we have only 3 examples. 3 examples is very little to do some statistical conclusion, right? But it's still very curious that Bitcoin has been very regular in terms of the size of these bubbles and how they decay. So there are these 2 things. There are 2 different diminishing returns. But you were saying something about the diminishing return. What do you think? That maybe this time we break the pattern?
Hard for me to believe that this much money's flowing into the market and you wouldn't have look, I'm not saying that it's not gonna stay flat. I'm just saying that your model doesn't mean that every quarter, every period is perfect. But over time, the diminishing returns can show up. I just happen to believe this is going to be a really, well, maybe what I'm really saying, risk adjusted, my return at 69 or 40,000, which I think most people in this last cycle, their average, I mean, you got BlackRock coming in at 59,000. This last batch that Saylor bought's at 60. Right. So you're seeing an average of people acquiring. And maybe what I'm saying is that risk adjusted, because I would never have put millions of dollars on Bitcoin at $100. Bitcoin.
Right.
Not exactly. A chance, not 15 years ago and not 12 years ago. In fact, I removed the first 6 to 8 years of Bitcoin because I don't think it was a market. I think it was
I bought my first Bitcoin in 2012.
And no, listen, and you got awesomely, that was a great trade. However, you were not going to deploy your entire wealth. Like I quit my old job to come here, right? Like
I actually did, but I am crazy and I'm absurd, right? I'm a crazy scientist and you're a good businessman, right? That is the difference. You are a solid businessman. At that time, I just used my intuition about, I'm not saying that I could have lost everything, but from what I understood about Bitcoin and where Bitcoin was going, using my technology, understanding of things, I was lucky, I was lucky because I was in the right place.
Well, I would say, Giovanni, you did something that most people can't do. You studied a market, you had a thesis, and you pulled the trigger. Most people, I can't tell you how many people have come up to me from the various industries I've been in. And, the guy that worked for the oil company is like 40 years later, anybody could have done that, Gary. It's like, yeah, but not everybody did do it. I didn't buy $10 Bitcoin. I mean, good on you, Max. Like, that's awesome. But I actually think, and I think I just answered my own question, the risk related to Bitcoin today is so different than when you first bought it. Maybe my returns do need to be smaller because the risk I'm taking is
what? You're giving me a wonderful idea because I could probably create a chart of what these risk-related returns are, right?
See, this is really important for Joe World because they're looking at 69,000 going, fuck, man. Yeah. Giovanni bought this for $300 and I'm like, look, there's no way you would have put $300. You wouldn't have put $30 million into this thing.
And this
is a better opportunity, man.
Absolutely.
This opportunity is so staggeringly
I
cool.
want to do what you're giving a fantastic idea because I'm going to reproduce this chart where you see this diminishing return, but it's an illusion because like what you just said,
it is an illusion.
People will not have invested here, and in fact they didn't. This is why it was a 10 million, 100 million asset instead of being a trillion asset, because it was crazy. You had to be literally nuts to invest even $1,000 because you could have lost it. People were making fun of Bitcoin at the time, right? People were buying pizzas. I never understood that because the moment I bought
I don't understand why they're buying potato chips right now. They don't understand Bitcoin, in my opinion.
Yeah, when I bought Bitcoin and it was not $10. I bought my first Bitcoin when it was like $200 or $300. But people were buying silly things. Even recently I saw somebody that bought a house when Bitcoin was $1,000.
Yep.
They thought of it had an incredible deal because they bought it at maybe at $1. Okay.
Yeah.
But wow, I made 1,000 times my money. Well, Bitcoin went up 100 million times in this history. 100 million times. Do you know of any asset in history? I don't think one could study historically anything at all. Any gold rush or anything like that. I don't think it was ever. And not in 15 years, but not even in 100 years. 100 million times. 100 million times. This is what Bitcoin did. But you had to be crazy to be investing here. So I want to redo this calculation, like you say, using some kind of
I think
risk-adjusted metric.
Yeah, Giovanni, the other thing that might be worth looking at is drawing a baseline and reminding people when you buy IBM stock, it's not priced at $12. I mean, Bitcoin was effectively priced free. The energy costs were free when the first 2 years of trade. I mean, most people stole the electricity. Let's be honest. Okay.
Yeah, exactly.
They stole the electricity from the utility. They then were doing drugs and whatever they did. I think it's hilarious that the drug guys ended up in here because they couldn't process their money legally.
Right.
Now you got a bunch of drug dealers that are Bitcoin heavy hitters. I think that's hilarious. All from regulation, by the way. This just shows you, proves regulation and embargoes and sanctions are fucking so stupid. Their prohibitions don't work.
Absolutely.
If people want to go do something, let them do it, man. You'll drive away the black markets. I mean, this was a black market.
Money laundering. I mean, you know that they tested cocaine, right?
On the dollars.
I mean, that is what is used for. They use cash, right, to do.
If you could test Bitcoin, I suspect it's got a lot of coke on it too.
Sure,
but you can't test it. Isn't that the beautiful thing?
I like this idea of adjusting it for risk. And we have
because Giovanni, I think because I think human beings, one of the things that Bitcoin's taught me is that human beings do not understand value. Mm-hmm. They only understand some numbers because I think it's easy for them, but I don't even think they understand the numbers. But most certainly they do not understand value. And my point here is that $60,000, $70,000, a $1.3 trillion industry, now we already have a totally different set of buyers. The exact same thing that's going to happen in MicroStrategy when they get bigger, probably 3 or 4 months, when they do the FASB, I mean, their stock's going to rock because they're going to end up in one of these indexes, and the index is going to require to buy them. Have you ever done this across like a MicroStrategy and see what?
Oh yeah, actually there is a power law between MicroStrategy and Bitcoin. There is a beautiful power law between the two of them. I can actually show you this. I will show it to you because I like how we have in this conversation today, because I already presented the power law so many times.
Anytime you want to shake it up, you just call Gary, because I get tired of the same old conversation.
Yes. So I'm going to show you this graph. Let me see if I can. Yeah, let me show you this graph because I created these indicators. By the way, I'm plugging myself a little bit. Hopefully you don't mind.
I don't mind, buddy. You guys follow Giovanni. If you're not watching Giovanni, I'll plug you. He's a smart guy. He taught at my college 15 or 20 years ago after Grant and I left. I'm stunned it hadn't been burned to the ground by the time we left. But Giovanni taught there. It would have been awesome for me to have Giovanni as a teacher. he would have probably either thrown me out or given me a straight A. I don't know, one or the other.
Actually, I will give you straight A. I had a lot of unconventional students, and one of the things I noticed that if you spend time with them and you are a good mentor, these are the best students ever, because they are not thinking like everybody else, and they have a lot of motivation, and I think you will have been an amazing student. Okay, so I did these, right? So these are my indicators. I have. Can you share the screen?
Yeah, sorry. I was sitting there basking
so I have
in your comments.
We are about 700 of us right now. They join my Discord channel. It's all done through Patreon because try to make it as ethical as possible.
Yeah.
That will be wrong to create a business around what my work around Bitcoin, because this is what I'm doing every day. I wake up in the morning, actually not in the morning, like 2:00, because I am a howl. I stay up until 4:00, 5:00 in the morning, and then I wake up, and this is all what I do. In fact, I should do more walking and go to the gym, but I'm thinking about Bitcoin every single day. I'm looking at data, looking on-chain data, hash rate.
So walk me through the model. I've got probably maybe 5 or 10 minutes, but walk me through the model, how it's different than this isn't measuring.
This is a MicroStrategy, right? So there is a relationship between Bitcoin and MicroStrategy that looks like a power law. So you take the log of the price of MicroStrategy on the y-axis, you take the log of Bitcoin on the x-axis, and you see this straight line. You see this beautiful straight line that is a power law. Now, the power of the power law tells you how much bigger the other quantities relatively to the first one, right? So for MicroStrategy is about 1.3. So basically, naturally, on an average day, MicroStrategy is about something close to 30% more efficient than Bitcoin. So over time, you're going to make more money by investing in MicroStrategy. But, like you say, it's also needs to be risk adjusted, right? Because the risk that you have in investing in Bitcoin is much smaller than the risk that you have in investing in MicroStrategy. Of course, right? Because it's a company, as a CEO, all the things that Bitcoin doesn't have and makes it more safe, right? But you get that leverage. You pay, it's a trade-off. It's always a trade-off, right? So what I did, I created this model that is basically the red line, where I'm accounting for this 1.3, right? This 1.3 leverage for MicroStrategy. Notice, so the red line here, this purple line here is the Bitcoin itself, is the price of Bitcoin. And the blue line is the price of MicroStrategy, is the closing price of MicroStrategy. Notice, if I go back in time, the two don't correlate anymore, right? Because, of course, before MicroStrategy bought Bitcoin, they were not correlated. You see how? In fact, they were not doing anything. The price was flat. That's why he decided to do something different. Then did it happen around August 2010, I think, right? When they bought.
Wait, slow down. Well, he started buying in
2020. So August 2020, right? This when you see how the price went from being flat to actually following Bitcoin price closely. Now, how the market does it, how the market decides to price this thing like Bitcoin, it's very cool. That the price, the different agents decided to do that, right? To price it proportionally to Bitcoin. But they come close, very, very close. And the red one is my model. The model says if this relationship between Bitcoin and the MicroStrategy continues to be like this is what my fair value of MicroStrategy should be. That is a kind of orange price here. I maybe should choose better colors or whatever. But you understand what I mean.
Yeah.
Basically, when the blue line is above the red line, the orange line, MicroStrategy is overvalued, and vice versa. Like, for example, here, it was undervalued relatively to Bitcoin.
Right.
Undervalued relatively to Bitcoin. Right now, you can see it's much more value by a factor of 2, something like that. And the other thing that we observe is that it's doing this. Now, when you see a straight line in this type of graph, it is called a log linear graph, because
a log linear.
Log linear. So I take the log on the y-axis and the linear on the x-axis, because unfortunately, TradingView doesn't have. I'm using this app called TradingView. It doesn't have a log on the x-axis.
Sure.
Because most assets don't use it. So, it was me, crazy Giovanni, that used the log of time, and it works with Bitcoin and it works with MicroStrategy, but they don't have it as a feature. But it's okay, because you see, when you see a straight line, you see this looks pretty much like a straight line.
That's right.
It's, since September 6, it started to do this thing. That is an exponential. That is becoming exponential. So the price is going exponential right now, and is leaving Bitcoin. There was a very good match before. Now that match is not there anymore.
How long would you expect that to continue?
I'm very puzzled by this, because I liked my model better, because it allowed for that leverage, but it was a sustainable leverage, right? It was 1.3. It made sense. So you could still, because you see, I even created a power law. You see, this is the green line, is the power law of MicroStrategy. The power law of Bitcoin has a slope of 5.7. This slope is 7.2. So it's basically a power law on steroid. But now, from being a power law, it became an exponential. And remember what we said before about exponentials, right? That eventually they die. Now, it doesn't mean that MicroStrategy will die. It's probably this craziness. So it's possible that basically one way to interpret this is that maybe MicroStrategy is having its own bubbles, right? That are maybe independent, because maybe you can think that we just started our normal bubble. Maybe it's anticipating. That could be what happens, that MicroStrategy bubble starts earlier relatively to the Bitcoin bubble. So if it is a bubble, that is fine. But I don't think this will be what MicroStrategy does for the long term, because it's completely unsustainable.
Yeah.
I calculate, right now it's going up. I calculated what is the pace of growth. The pace of growth is something close to 1.1%. Do you realize per day? Do you realize how
whoa. Yeah.
Yeah, it's like
500%.
Yeah, 500% in a year. Right? Exactly. You have it memorized. It. That is exactly what you will get.
But Giovanni, I mean, he keeps adding the most valuable asset in the world to his balance sheet. I mean, could you see this last for a couple of years? If he keeps
I'm
buying,
asking you, because you are more of an expert.
Actually,
I give you the numbers. You tell me if it is a good investment or not, because we can collaborate on this, because you are the more sane investor.
Well, let me just say something here. So, I have a lot of Bitcoin, and something you said earlier about selling at these tops, I don't think I need to sell. Like, to me, I could buy a leap put on MicroStrategy.
Absolutely.
But let's say I have $10 million in Bitcoin, and for you people using numbers, most guys like me and Giovanni, we just talk in units. And the reason we're really just using a large number like $1 million is because it's easy math. So it makes sense at 1,000 units or 100 shares or 101 Bitcoin. It doesn't matter. So, where was I? So he's worth, sorry, I got British Huddle calling me because I wanted to talk to him about some of his views on these crazy spreads here. But I could see a case where I never sell my Bitcoin because there's other things I can now buy that protect me.
Yeah, absolutely.
I have, let's say, $10 million. If I had $1 million, I could probably spend $30,000 or $40,000 buying some long dated puts. on anything that emulates Bitcoin, which MicroStrategy is going to emulate it perfectly, right?
Can you share this with the community, because I'm interested in doing something similar,
Yeah, man.
I would like your help with that, because I'm trying to learn more.
I'm just looking at them. I mean, for instance, the SMST put, it traded down to $1.80 yesterday, man. It's at 229 right now. It moves a lot. So it's basically the 3x leverage put. It's the inverted of the 3 MST, which has gone up from 20 to 60 in less than 20 days. And I think some of these options maybe begin driving some of this. But to me, being able to buy a long dated put, 2027, which would be about the right time period, right? Jan 2027.
Yeah, because this is my projection that we top on 26, and then we go down if a cycle is respected. In fact, we should go down all the way to 70 if we continue to do the same thing, and that will be around 27, right? Exactly.
And that means you still let me see. Don't give me the answer, but that I think means you said 70, huh?
Yeah, for Bitcoin, 80, close to 70,000.
What do you think the drawdown is going to be next time? We go through the cycle, we peak.
So we go from 200,000, and that will be the end of 25.
200. I thought I saw 270.
270 is based on return. So there are two different calculations, kind of similar result, but slightly different. This one is based on price, that is 200. If you use returns, is closer to 270.
Yeah.
But it's probably do an average between these two. So probably 250. I think 250 is a pretty good estimate.
So 200 grand times, say, 75%.
Yeah, so we go down to 70. That is what, 80% or 70%? What is 70 over 200?
Yeah, about 60 some odd percent, actually. That means the drawdowns are getting smaller, which would make sense.
Yeah.
The returns slightening, and also the bottoms are slightening, which validates the lower risk theory.
Yeah, exactly, right?
Yeah. I would rather. Sense. Yeah.
So, and you suggest to buy some puts, right, against MicroStrategy. What about miners? Any miner? Because I also I'm going to make a similar model for Mara. You see, this is Mara.
Yeah, the problem with the miners, this is the cool thing about Saylor. The only risk on Saylor, I know people get worried about centralized risk, but he's saying over and over, hey, you guys don't have to worry about me selling. Right? He's a public company.
Yeah.
So I think actually he could get killed on an airplane tomorrow. His board is going to follow through with this. I've met their board members, man. They're just like him.
Probably have a plan.
They've cleaned out everybody that had any doubt. We have a big. I wouldn't do this on the miners, man, because look, what if their electricity prices change? What if their location changes? What if they decide to go fucking mine Casper?
Do you know a lot because I'm talking to a lot of miners, because they're asking me to help them with because even hash rate is power law, right? So I'm talking with a lot of miners. You know what they are doing right now? A lot of them are converting to data centers. They're stopping mining Bitcoin. And they're going data centers.
Well, look, they're going to chase
whatever,
margin.
Right?
Yeah, they're going to chase margin. And I don't personally. I mean, I own a lot of miners, but I personally, the time frame for owning these miners is very different than Bitcoin. Mm-hmm. We'll see if it's successful, but there's a lot that can go wrong with these miners.
Yes.
They're priced. They're funky because, I mean, ExxonMobil could come in and just buy all of them, never even miss a beat. They probably won't, though, because what do they have that ExxonMobil needs? Mm-hmm. Nothing, man.
Exactly. Yeah.
Not really. They
Yeah,
have
we
a
have
really
this very
cool
good.
multiple.
We
They
have
have
a
a
very
very
good.
good multiple.
You know what we have? We have very good electricity contracts. We have these contracts that are 20 years
Yeah.
long, and
Who,
they are.
who you think can get a better electricity contract? Guy with shitty credit or ExxonMobil?
Yeah, you're right.
ExxonMobil can just create their own bloody. I mean, they
Yeah,
look.
exactly. This is
The
what I was going
miners
to
have
say.
so much risk. They have capital risk, they have
Yeah.
location risk, and they have energy costs.
Yeah,
Everything the Exxon already has.
I agree. Because even this data center business model, right? Maybe it's going to be like a bubble, because right now, okay, we have these contracts, etc., but we are already talking about creating new nuclear stations. You know, we are saying, okay, we need all this electricity. Let's make some, and in particular with Trump, right? He wants to make United States electricity rich, and so we are going to create new nuclear stations. We are going to create all kind of opportunity to create more power, because with AI we need a lot of electricity, and these contracts from being valuable are going to be worthless, right? Because if we can have other alternative sources of energy, these contracts are not so good like they were before. So you're right, MicroStrategy is the way to go.
I
It's
think
great.
so.
Yeah,
I think so. And they're it's going to be a very liquid stock, and there's going to be a lot of liquidity around the options. But hey, listen, this is really awesome. I really appreciate you spending some time with me. It's gotten me really
we can do it
understanding.
again.
And then I'd love to do it again, and let's do the risk adjusted. Have a conversation. Does that make sense?
I love it. I need just to think, and maybe we can have it offline, because I'm going to ask you what we can use as a metric for risk adjusted. But I have a couple of ideas. But it's a wonderful idea, because I think it's easier to invest right now. It's probably a better investment, Bitcoin right now, than it was 10 years ago, once you risk adjust it. It's a wonderful idea. I kind of had an intuition about that, but I never thought it in that precise way. And it's a beautiful idea. Yeah, thank you.
Yeah, well, I mean, the way I say it is that January of 2023, Bitcoin was 15 years old, and it's the only young teenager that has ever been invited and accepted to every private country club on planet Earth.
Yeah.
The only 15-year-old ever, okay?
Yeah, it's incredible.
Oh my God, man. Like, I'm meeting people. Oh yeah, I own $300 million worth of Bitcoin. I own 50 million. I mean, I'm like, get the hell out. And they've been quiet about it, dude. Everybody and their brothers coming here. See, this is so cool to be connected to the old world, because like my brother missed the window, and now he's looking at it going, oh shit. No, he's going to have to play catch up now.
Are you guys twins? Are you twins?
Yeah. But this thing, when these markets like this run, they run, man. They run hard, and everything is set up for this thing to run like a beast.
So, would you think we go higher than 200 this time, or no?
I don't really know. I don't think I really care.
Yeah.
I hope it doesn't run too fast. I like the way it's behaving.
Yes.
I don't want to see anybody get wiped out. I think a $20,000 day, and you have liquidations. We're going to have that day one day to see if the market can handle it. But the market's eating $1 billion worth of Bitcoin every day, and it's not responding like it's violent or young or immature.
Exactly. And I love it in that way. I think it's great, because it gives you both, right? Because if we can, even let's say you don't do anything, you don't take advantage of a volatility, and you just see it, right? Like a lot of Bitcoiners want to do that. We are talking about 65 times in 15 years. But again, given how solid of an investment Bitcoin is, I don't know of any other asset, in particular if you are a young person, because 15 years is nothing, you can multiply.
I mean, 15 years, my children are 30.
Yeah. And so you're going to have 65 times. So we are talking about a Bitcoin that is $4 million in 15 years from now. And so this is why everybody that criticized the power law, first of all, it's what Bitcoin is doing. There is no doubt. Scientifically, it's proven.
It's doing it whether America wants it to do it or not, man.
Exactly, right? And if it continues like this, there is nothing to complain about. 65 times your return in 15 years. It's amazing, and it's now 65 of 10 years ago, because yes, okay, you could get that in 1,000 days, but the risk associated with it, the worries, I mean, it was
the difference, Giovanni.
A lot of this white hair is due to being around in the Bitcoin world, but I'm glad, right? Because it's been an incredible adventure. But there were times where it was really hard, to be a Bitcoiner, because even when you have a guide like this, etc. And by the way, it's not that I knew everything from the beginning. It took me time to understand all these things about the cycles, about the power law. It's a long process. I've been doing this for 12 years, but it was hard. It was hard. I was hacked. I lost 35 Bitcoins on an exchange, because at that time, we didn't have the knowledge. We didn't have the experience. You thought that, these exchanges, it was not in a third world country. It was in England. And, I thought it was a valid business. It was incorporated in England, and there was a psychopath that they bought the exchange. Eventually, they sold it to this psychopath, and he ran away with all the Bitcoins in the exchange.
Right.
These are some of the things that
see a lot of that's going to go away. That's going to go away.
Exactly. It's already going away, But,
Giovanni, let's make sure everybody follows you. Giovanni's an awesome guy. We're going to do another show on risk-adjusted power law. I think that'll be really good.
I love it.
Giovanni is always available. You guys, he does a lot of publications, so he's a really, really cool source of information. This is one of the benefits of coming into Bitcoin. I've met some really cool people, and you're one of them. Really enjoy knowing you.
Often in your spaces, because they're, by the way, the most interesting spaces on Bitcoin ever. Fred Krueger has nice ones, but I love yours too, because it's really uplifting. Listening.
Oh, thank you.
From all different and you are a very good moderator. I really love your spaces. They are very interesting.
Oh, that's really kind of you. Say thank you very much. Well, I think there's more to learn here, more to gain than just getting rich financially. I think I have learned something here, that there's something really cool about this industry on a philosophical and spiritual level, and that I think is what you're saying is like,
exactly.
Can you wrap all the life stuff up? And it's my little involvement in Bitcoin for 4, 5, 6 years and a lot of investment. It's made me a nicer person. I mean, I cannot attribute anything other than Bitcoin has made me not only a nicer person, but I have met a lot of cool people.
Yeah.
And I can't explain it, Giovanni. It has helped to me what the Catholic religion was supposed to do.
Do you know what it is? And it's kind of the title of my slides. I say it's the union between all these ideas, like something bigger than you, right?
Yes.
And that's to do with value. Value, you're saying people are very a problem in giving
exactly
value.
Right, man.
And Bitcoin gives you an idea of what value is all about. First of all, this idea that things that are valuable take time, because yes, Bitcoin has grown a lot in 15 years, but right now, for example, it's slowing down, and it's teaching you something about that things that have value need time, right?
Yeah, it's slowing down, but it knows where it's going.
Exactly.
And you need to have teenagers, an 8-year-old can run around, but he has no direction, man.
Exactly.
He's an idiot, right? We are 15, 16 years old, a super athlete, super anti-fragile, has been attacked every way you could attack him. Man.
Absolutely. Bitcoin, from the beginning, from when he was born, I like this analogy of the age of a person.
Oh, totally.
It
is the right analogy, actually.
And like an enlightened person, right? He was a saint or something, because we do all kind of things to it, and he doesn't care, he forgives everybody. Always, I say all the time, he's almost like this Zen warrior that wins battles without fighting. because look at what happened with the ETFs, right? They were criticizing Bitcoin, they were shitting on Bitcoin. Even Saylor was doing the same. And then Bitcoin said, okay, I don't care. You will come to me one day, you know? And this was exactly what happened. And people talk about, for example, nation states, right? That one day nation states will adopt Bitcoin. That will happen at the right time, at the right place, and it will happen without fights. It will not happen. We don't need a revolution. We need.
How long do you think that takes, my friend?
I think it's going to happen when Bitcoin reaches 100 trillion, and that is 20 years from now, because it needs to have a right size. That needs to have a right size to involve the nations, right? Big, large nations. Right now, small nations like El Salvador or Bhutan, you know, they can be involved at the nation level, but because they are small. Large nation like the US, we will need to reach 100 trillion, basically kind of like the entire wealth of the world, right? Close to the entire wealth of the world. That is on the order of a few $100 trillion, right? And that is 20 years from now. It is not even a crazy amount of time if you think about it, right? But 20 years will give Bitcoin.
I think you're going to be really, really wrong.
Yeah.
Really wrong. I think you're going to see early? I think you're going to see mid-tier sovereigns the size of Turkey, between Turkey and El Salvador, do it in the next 9 months.
Oh yeah,
if they haven't already done it. Well, doesn't last 20 years. Then you're going to get acceleration.
Well, 20 years is a large nation like the United States, of course.
Yeah. But
you will have middle nation, right?
Remember, the first step to holding Bitcoin on your reserve is not to sell it in the auction market once you do have it. And we already know if Trump's in, he's not selling. He got it very clear. Like I met with a guy. Do not fucking sell that, dude. Like Germany is a basket case now. You know why they had to sell it? Because they're so broke. It's unbelievable. They probably didn't want to sell it, but they had to because they're going to announce they're in complete. I think Germany's completely bankrupt. How does it pay for $2,000 megawatt power? And it's an industrial nation, right? The reason it's going to stop building Volkswagens, it doesn't have any energy, dude. It owns no energy, no food. Europe is completely torched.
Yeah, because of a war, right? Because of a war in Ukraine.
Well, because we snip. We snip their access to the cheapest energy on planet Earth. Mm-hmm. I mean, wow. Anyway, there's a lot of dynamics going on. But this doesn't last 20 years.
But hopefully that ends soon, you know.
Yeah.
Because it's not good for the world, you know.
No. It's not good. No, it's not good. And this is I think Bitcoin's going to be the great neutralizer. It's going to be the Switzerland.
Yeah. But
hey, Giovanni, always good to see you. I always get really excited. I'm probably going to go buy some more Bitcoin this afternoon just after talking to you. All right, my man. Hey, see you later, and let's schedule another one. You get the math
I'm going to work on the risk-adjusted power law. That sounds a great idea. Thank you.
You're the bomb, buddy. Hey, you guys follow Giovanni. He's awesome. Thank you, Jay.